Hi everyone, welcome to the review of Chapter 8. Chapter 8 is looking at GDP and how to calculate GDP, as Chapter 9 is looking at economic growth and development. When we look at this week, we're going to look at the circular flow and how we can evaluate the role of GDP on various economic sectors and how these economic sectors are affected by changes in government, businesses, households, international sector. You notice that businesses are supplying things to households, whereas households are giving businesses to supply things. Households are also supplying the factors of production, whereas businesses are giving us payments or rent payments for those factors of production. So that's the simple circular flow of income and products between households and businesses. We look at the simple circular flow, we're looking at the yearly amount earned by the nation's resources. It includes things as wages, rents, interest payments, profits, landowners, anything that's focused on the payments for the factors of production that we look at. And those are very important to evaluate. We look at final goods and services. You notice that we're looking at their final stage of production, and it will not be transformed into yet other goods and services. Now, when we look at national income accounting, this is the concept that you'll really be focused on your test. It is measured based on GDP, which is the dollar value of all final outputs. So when GDP measures the total value of final goods and services produced each year, it's based on the nation's borders. So anything within our borders of final goods and services within a particular time period in a year is very important to evaluate. Things that we look at with final goods. We have to focus on the production of the final good and not intermediate goods. So that's an important question to evaluate. Intermediate goods are looking at goods on the calculation, and intermediate goods are focused on goods to make other final goods and services. And we look at intermediate goods. If we look at, for example, bread. Wheat is used in the production of bread. Let's say it costs $1 to make the bread with the wheat cost, and bread sells for $2.50. So the calculation in GDP would be actually $2.50 and not the intermediate good, because that's included already in the final good. We're also not going to focus on any financial transactions or anything that's not produced within our economy. So financial transactions or household transactions will not be included in national income accounting. We're also not going to include anything that's in the underground economy. Underground economy is focused on any black markets or anything that the government is not able to track. So that's not included in GDP. And that's an important focus that we should focus on. It's also looking at non-market production, and it's not necessarily looking at a measure of the well-being of a nation as well. It's focused on how our economy is looking at how we make up final goods and services, at things that are bought and sold in our economy. GDP is a measure value of the final production. It's not a measure of the nation's overall welfare. It's just telling us what we have produced in our economy. We're going to measure it two different ways: nominal GDP and real GDP. And we look at this way of calculating. We're first going to start with consumers. Consumers spend money on durable goods, anything that holds value, non-durable goods, things that are consumed very quickly, and services. Consumers make up about 70% of all GDP. Then we have gross domestic investment, or businesses. Investment is not investing in the stock market. Investment is firms investing in capital, machines, and inventory. Then we look at government. Government spends money just like businesses and consumers. So government's focused on state, local, and federal levels. And then we have net exports. And net exports is focused on exports minus imports. You notice in the U.S. that we have a large net export, or I'm sorry, a trade deficit where we are importing more than we're exporting. So those are some of the basic concepts of GDP and how it's being calculated. If you need additional resources, please let me know, as I'd be more than willing to supply that. But I look forward to your effort this week.